Welcome back, traders. John Caruso here, June 15th. Of course, today is the FOMC meeting. We'll hear from Jay Powell and his constituents later on today. Looks like the market's pricing in a 75 basis point increase based off of that CPI number that we saw last week. Very hot number that we saw. We did recently see PPI, still a very hot number in PPI. I believe producer price indexes, I think it was up 10.8. I think the market might have been looking for 10.9 year over year. Regardless, still a very hot number. So the Fed's panicking again. Obviously, we come into Monday morning. We had the idea that 50 and 50 was going to be the base case. Now it looks like it could be 75 and 75. So we're going to hear more about that later on today. And of course, this morning, the big news was that the ECB is planning on calling the roll here today as well, in an emergency SOS meeting over in Europe. European bond yields have skyrocketed over the past few sessions. The bond markets, investors have been purging bonds over there in fear that the ECB is going to be raising interest rates too quickly, head on into a massive economic slowdown over in Europe. We did see the Italian yields actually at one point shoot up over 4%. We do have bond yields over in Europe starting to come down here today. So the ECB is coming out today to discuss financial fragmentation. Stock market, U.S. stocks up 1%, gold's up 1%, starting to smell the panic inside of the central banks. Yields 337 on the 10-year, 241 on the 2-year. Yes, we've got an inverted yield curve again, and yes, we think any talk of a soft landing is akin to the Fed telling us that inflation was transitory last year. So that's where we're at. Gold, still one of our favorite places to be on the board. We might have a little more near-term volatility to negotiate with here over the near term, but that's where we're at right now. Best of luck to you out there. We'll try to get something out to you perhaps after the Fed later on today. Have a great day.